This is Chapter 1, Exercise 1-13, Identifying Effects of Transactions Using the Accounting Equation. The problem reads, Ming Chen began a professional practice on June 1st and plans to prepare financial statements at the end of the month. During June, Ming Chen, the owner, completed these transactions. We're then given a list of transactions A through J, and asked to enter the impact of each transaction on individual items of the accounting equation. Enter decreases to account balances with a minus sign. Let's take a look at the first transaction. The owner invested $60,000 in the company along with equipment that had a $15,000 market value in exchange for its common stock. So the transactions that we'd enter on the schedule would involve these three accounts: cash, equipment, and common stock. How much did cash increase by? Cash increased by $60,000. How much did equipment increase by? Equipment increased by $15,000. Therefore, for our balance sheet account to be in balance, the total of these assets must equal the total of the claims on these assets, and there's only one type of claim. That's the stockholder claim. In this case, it's common stock, part of stockholders' equity. So stockholders' equity or common stock would increase by $75,000. Part B, the company paid $15,000 cash for rent of office space for the month. So what accounts would be involved in this transaction? Well, there would be two. Cash was involved, and also rent expense was involved. So those are the two accounts that are involved. The dollar amount was $15,000, but what happened to cash during this transaction? Did the balance go up or did the balance go down? The balance went down. So let's put in minus $1,500. And then over in expenses, we have a new expense, rent expense, which is part of our total expenses, and that increased by $1,500. And from here, we then subtotal things. And Connect is doing that for us automatically. Let's move into Part C. The company purchased $10,000 of additional equipment on credit, payment due within 30 days. Well, what accounts are involved in this transaction? Well, they purchased $10,000 of equipment, so we know that equipment is involved. They didn't pay cash for it now. They're paying for the cash later on. They bought it on credit. They have a new liability called an account payable. So to enter these transactions onto our effects equation template, we'll put that equipment in Part C went up by $10,000, and that accounts payables also went up by $10,000. Moving on to item D. The company completed work for a client and immediately collected $2,500 in cash. What accounts are involved in this transaction? Well, how much did cash go up? Went up by $2,500, so cash was definitely involved in the transaction. The company completed work for a client. Sounds like they have new revenues, so the revenue account went up as well. So in this transaction, cash is involved, as is revenue. Since they collected that cash immediately, the cash balance goes up immediately. So in Part D, cash goes up by $2,500. To show that the revenues increase, put that as a positive sign as well, and revenues increase by $2,500 as well. So after transaction D then, we have a balance of cash left of $61,000. Equipment balance is now $25,000. Accounts payables, $10,000. Common stock, $75,000. Revenue, $2,500. And expenses, $1,500. Let's do one last one here, Part E. The company completed work for a client and sent a bill of $8,000 to be received within 30 days. What accounts are involved in this transaction? Well, we know that the company completed some work for a client, and that's revenue to them, so they definitely received a revenue of $8,000. But are they getting cash now? No, the cash will be received in 30 days. So instead of an asset called cash, they've received an IOU called an account receivable. So the two accounts involved in this transaction, revenues and account receivables. Revenues will go up by $8,000 and account receivables will also go up by $8,000. We'll stop here and let you complete items F, G, H, I, and J on your own directly in Connect.